Good afternoon or good morning. Welcome to the Everest Metals Shareholder and Investor Webinar. ASX ticker is EMC. Today we are joined by Executive Chair and CEO Mark Caruso and Business Development and IR Officer Simon Phillips. Mark and Simon will provide an update on the Revere Gold Project, the Mount Edon Critical Minerals Project and the Mount Dimer Gold Project, all located in Western Australia. Questions can be submitted, which we will attend to at the end of the presentation via the chat function at the bottom of the screen. They can be added in as we go along. I'm going to hand over to Mark. Thank you for joining us.
Okay, thank you, Mel, and good morning, everyone. Thank you for the opportunity to share an update on EMC's business development profile and its projects. I think we last met in March. Our last webinar was in March, so a fair bit of ground is in terms of reaching our objectives and advancing them has been made since then. So we're here to tell you about. We've got Simon, our business development and IR office, investor relations officer with us at the moment, and we are moving forward with becoming a near-term gold producer and obviously moving towards our objective with Mount Edon in terms of developing a very strategic industry-first rubidium project within Australia. So obviously we're disclaiming everything we say, so don't believe anything I say. I'm joking, but here we go. So what have we got in the EMC? We're proven gold mine developers. My pedigree with Allied Gold, for those that are listening, if you just go back there, we built a couple of gold mines in the most difficult environments in the world, in Papua New Guinea and the Solomon Islands, and we're a near-term 200,000 ounce producer, and we AIM listed that company and corporatised it with a merger of St Barbara 2012 and a $1.2 billion merger. So we know a little bit about finding gold, developing gold and operating gold mines, so that's always good to have in the under your belt. So we have within the stable at EMC the Mount Dimer Taipan Gold, formerly Taipan Gold Project, and we're fast tracking that to production and near-term cash flow. We have Revere, which is the project which was vended into EMC around about 3 years ago, and we've moved forward with advancing. I guess what we should say, we initially were looking at unlocking the copper potential, which still is there, the Caruso-style copper potential. That still remains untapped and requires further work, but we've moved to the near-term cash flow objective of bringing the gold resource into production, and that's well advanced. And then, of course, we have the Mount Edon Critical Minerals Project, which is located in Paints Fine, just off the highway, 5 k's off the highway, and uniquely we have the highest grade rubidium resource in the world, and we've advanced that project by developing a specific rubidium processing technique, and that's gaining momentum now as we have with our partners ECU, and we move that through to the next phase. So EMC, there's a quick corporate profile, nice share structure, 224 million shares on issue, market cap, plenty of upside there, cash, we're well supported in terms of our current cash and also our support for further funding, so we have good transparency and runway through there. Mount Dimer, so we'll start through the projects. Mount Dimer, the first one. Mount Dimer was a project that was in Everest and was the project that we decided to embrace after rationalising all the other projects we inherited with Everest. So we've got an inferred resource there of about 48,500 ounces, good grade at 2.1, and really what we're looking at here is a cutback of an existing pit that was mined, and the mining, we've moved that forward with mining approvals, and I think that was announced to the market a couple of weeks ago. I don't think it was announced to the market a few weeks ago, and we are now shovel ready to dig to do the cutback. We're just finalising a toll processing agreement, and what that project once we've finalised that, that project will give us about 22,000 ounces of gold recovered, and that will be toll processed at a destination yet to be determined. We're in advanced talks with toll processing entities and have received positive feedback from at least one of those to treat the material. It's just a matter of timing. The intention there with that project is to simply bring it into production, start to cut back in the last quarter of this year, subject to a toll processing agreement being met. We're looking at some debt finance for that, so that's not going to be dilutive in terms of what we're doing in terms of financing to shareholder value. So, as I said, the resource is there at 2.1 grams, 48,500, bit of silver in there. Previous historical test work shows that it recovers well at circa around about 90%, give or take, for a standard CIL, so nothing too onerous in any of that. Approved in August 24, the mine proposal and mine closure plan, so we're ready to go. Pit optimisation metrics outstanding at the current gold price, and I think it yields us around about $31 million net of sort of free flow cash out of the project, but so within a 14-month period. So as I said, negotiations underway for toll treatment of ore. We're advanced with one party, but that still needs to be consummated. But at the grade of circa 2.2 to 2.5 grams, that's sort of pretty good dirt, and we can cut that basically to multiple toll processing facilities. Given the grade, it doesn't make it sensitive to the transport cost. So hoping to commence activities in Q4. So obviously, you know, some of the results there that have been previously drilled, obviously very indicative of some good grade, and we have actually recently tested some of an EM anomaly on the exploration targets, and notwithstanding that the Dimer pit, the pit that we currently is under approval, has potential extensions to the southern boundary. We also tested the EM and the adjoining exploration, which gave us, and we released those results, and it gave us encouraging targets, as well as encouraging results to suggest that there might be similar mineralisation that correlates to the current Mount Dimer mining pit. So we're looking at expanding that potential or investigating that further as we get into cash flow. So the priority of what Dimer provides for the company is near-term cash flow, right? And we intend to fully exploit the cash flow that we get out of that to not only underpin further exploration and potential further resource inventory at Dimer, but also to provide near-term cash flow funding for the company's other projects. We move to Revere. It's strategic in terms of it's along the Gold-Rich Andy Well Greenstone Shear System. You'll be familiar with Mika Minerals, who have Simon might butt in there and just they picked up. Mika Minerals picked up the Andy Wells project and have done a great job of bringing that back into production. I'm not sure what their market cap is, Simon. They're sort of
yeah, I think it's circa 350 million at the moment. No, they're on budget and on target by the look of things. So a very good neighbour to have.
Very good neighbour indeed, and yes, so we've sort of been, as I said, tested the copper anomalies there initially, which probably delayed a little bit of our gold our gold strategy. But we've moved with gusto to define the resource, define a near-term resource so we can get into production. The company's strategy is simply getting to production and make cash flow, so we don't have to continually keep going back to shareholders for money, and being non-dilutive and adding value under that business development profile. So 9 tenements. I think you should just go back there, Marissa, if you don't mind. But yeah, 9 tenements. Good. We've done a great effort there of consolidating the tenement holding. We've made a mining lease application, so we're well advanced with that, and I'll elaborate on that shortly. 7 kilometres of strike of gold reefs known as the Revere reefs. High-grade gold up to 85 grams per tonne. Gold anomaly zones identified along at least 2,000 metres or 2 kilometres of strike from surface. and repeatable saddle reef systems similar to the Bendigo style from surface. And there's no doubt that it's deemed a large-scale organic gold system potential. So where are we with this project? We have what this project offers. When I last spoke at the in our last webinar, I said we had a very good potential for a million ounce plus deposit. I suspected that would be a low grade, lowish grade as a bulk mining operation. The enigma of these deposits, the Bendigo style deposit and the saddle reef deposits, is that the gold is in high grade reef systems, and you need to be the delineation or the identification of resource into grade is sometimes difficult, but we think we've unlocked that enigma, and we're very comfortable now that we're well advanced to understanding the geology, and it looks like we now are looking at a target, as we've said here, notwithstanding the high grade quartz loads, but we've also done a bulk sampling test campaign, which has indicated that there is gold halo outside the high grade reefs, and it looks like we're going to look at a maiden JORC resource in Q3, which will be a large lower grade deposit, which will be gravity separated and low cost. So the Revere reef system, we've proved that by connecting two drill and blast areas and then doing a bulk sample. So that's been done, and we've got 700 metres along strike, which will form the target of where we're about to mine. If you can just have a quick look at that, map. The two main areas that we have there are what we call the Lucky Dog area, which will be the subject of our current first MRE, and that's where we did a bulk sampling campaign along with the former RC and just more recent RC program, and we're very comfortable there that we're looking at a resource and a resource target of around about 350 to 400,000 ounces there in that deposit. So the grade will be a lower grade than what's normally expected, but the important thing to remember here is it's gold from surface, the three key points: gold from surface, low strip ratio, and it will be gravity separation, no CIL requirements. So, it needs to be understood, the deposit and the resource needs to be understood in that context. Yeah. So, and we think we're very comfortable, given the high grade occurrence of reefs, which we've now mapped down to 130 metres repeatable, that we will certainly get a better gold reconciliation in grade than what the resource might project when we release it. So, as I said, we've moved our gold division to a near-term, if you like, our gold projects to near-term production with Diamond. Very plain, vanilla, low risk. The biggest hurdle we've got to deal with there is just getting a toll processing agreement in place, but nothing new about any of that. We just need to identify the correct plant to send it to, and we're very comfortable we'll get there in relation to that, as we're in advanced discussions. In relation to, and we're advanced in financing that initiative at Dyma. So as we can see, what's happening there, you've seen we're going to start the mining in Q4, and then we move forward to production over a 14-month period of processing, which will provide us cash flow in the order of $20 to $30 million during that period, net cash flow, I should say. We then look at, we also, as I said, look at a resource expansion drilling on both the ML, testing the perimeters out of cash flow, and also on the exploration targets, which we identified. So looking at Revere, JORC resource coming, that's nearly with us, September, I think, end of September. Native title agreement, we've put a mining lease in. We were so confident that there was a gold resource there and some of that could be mined. We embarked on a mining lease application about a year and a half ago. We're in the final stages of native title discussions, and once we're hoping to get those tidied up in the next month. That again is the Achilles heel of all projects permitting, and obviously we're very close now with native title, which is the last hurdle we have to overcome. A few flora and fauna surveys to be done in September, and that project moves through to its mining approval process in 26. Yeah. So we see that as being, we also consolidate some other near-term tenements, which we have first right of refusal under, which we think will add an additional 250 to 300,000 ounces to the Lucky Dog exploration target of 390. So we see near-term 750,000 ounce target of exploration target, a production profile at Revere, which is low cost and low cost gravity separation, low cost strip, and supported by the Mount Dimer development in terms of cash flow. So that's our pathway to gold production, and we're very comfortable that that's very achievable given the way we're progressing. Investors would do well, shareholders would also do well to have a look at the past history relevant to Caruso and some of the copper targets which we identified in depth under the initial Diamond Core program, which still remain untested. So there's upside there. Notwithstanding, there's upside at Revere across the entire tenement holding for further resources, but the intention there is to get that initial resource out and get into production. As I said, the business development profile is to get into production. So I guess the topical within the world today is lots of geopolitical, lots of geostrategic positioning for critical minerals and strategic minerals, I guess. So, we've got what we believe is a very unique project, and obviously the Mount Edon project, very well located at Paynes Fine, about 5 k's off the main highway, off the sealed tarmac. So what we've got is we've got a very unique opportunity, I guess, and probably one of the few opportunities in the world where we can mine rubidium and bring it into production through our own defined processing technology, which we've developed with ECU. So maybe we can just move on to that next slide, if that's okay. Yeah. So what do we have? We had a world-class rubidium resource. As I said, we've given you the location, made in the third JORC compliant resource. We've done a preliminary engineering study completed, and we've also identified a potential cesium pod within the potential resource. I think we're drilling that at, am I correct, in September, end of September? Simon,
first week of September.
Oh, first week of September, sorry. There we go. So not too far away. And yeah, we've had a good look at the pegmatites and understand them very well. We think not only the potential to, the purpose of the drilling program is to bring the deposit into indicated, so we can then announce to the market the results of our preliminary engineering scoping study, which show a robust project that certainly makes commercial sense and warrants development. Yeah. So what do we know about rubidium? It's I guess the best analogy of rubidium, it's a very close, it's next door to cesium on the elemental table. So it's almost a direct replacement for cesium. So it's classified as a critical mineral by the US, Japan, and New Zealand. The only viable substitute for cesium, increasingly difficult to source, which is a fact. And critical roles, it has a critical role in applications for defence, aerospace, and high-tech industries. We can just go over to the right there, and we'll see quantum computing and atomic clocks. So every atomic clock and GPS telecom, every clock that runs an international time or timing matter, it has a rubidium component in it. So that's very important. Aerospace and defence, high propulsion engines, atomic clocks, and as I said there, and high performance plasma thrusters. We'd all be aware that that the world is moving into a new area of defence spending. So yes, so lots of uses for rubidium. It's quite opaque, the market, because it's worth about $1.2 million a tonne. So the market remains opaque, but there's a definite market there at about $4 billion. CGR going to $8 billion. So what are we trying to do at Mount Edon? Targeted drilling programs now to move the rubidium, the high-grade rubidium results into an indicated resource, and importantly, granted on a granted mining lease, and we have done a good job of testing those pegmatites for lithium initially, and now and rubidium, and we've come up with a JORC compliant resource of 3.6 million tonnes at 0.22%. Perhaps you could just go back there just for a sec. Mind. Yeah, and a little bit of rubidium, and we've got a high grade zone there of 1.3 million tonne at 0.33, and also some other high grade material at 0.5%. So the next step there is to get in there and bring that to an indicated resource, measured and indicated, which is not going to take much, and that campaign's in September. Yeah, as I said, cesium potential has been identified, so we'll test that with the current drilling program. So yes, please, next slide. Yeah, so 7,900 tonnes of rubidium oxide, so plenty there. It's open, as you can see, which is good, but we have enough with this net. There's clearly enough rubidium there to support the intended processing plan, processing of finished rubidium at 100 to 200 tonne per annum. And we, as I said, the resource model shows that Mount is amenable to open cut mining, low strip ratio from surface. So yes, so we'll get that resource drilling done in September and get a measured and indicated resource out to the market, which will allow us to then wrap around the results of, or announce publicly the results of our engineering study. So what do you, I mean, we spent a fair bit of it. We were very confident that the resource existed at Mount Edon. So what we embarked on very early in the piece was to develop a rubidium-specific rubidium-specific extraction process. We partnered up with ECU, a fantastic facility north of the river of Perth at Joondalup, actually world-class, you know what I mean, run by world-class industry experts, chemistry, lithium industry experts. And so we developed the rubidium chloride product, was successfully by direct rubidium extraction as well as a bit of lithium byproduct. We applied for a provisional patent February 25 of IP in Australia, and the patent actually underpins grant applications for the development of the construction of a pilot scale plant in 2026. So we then, as part of that overall process development, we found out that we could produce rubidium chloride successfully through absorption and not through the aggressive process of solvent extraction, which is the current way it's done in China predominantly. So we've got an environmentally friendly process with absorption. That allows us to produce the engineering study, which we know the results. I've said that supports a very robust project commercial and economic outcome. And then those engineering scoping studies will then allow us to move to the grant applications to build a pilot plant scale plant in early 2026. We should have the granting in place for that. So what does a pilot plant look like? Well, effectively a pilot plant is there that facilitates a scale up of the lab extraction processes. I'd like to point out that rubidium is currently produced in the world as a byproduct of lithium. So there's no, whilst we've developed a rubidium specific process, which just for everyone's benefit, there's nothing new in any of the actual technology we're using. You know, it's just that we've developed a very efficient way and made it specific to rubidium. So you know, whilst it has got its own IP, you know, we're not trying to reinvent the world with new types of technology. You know, absorption technology, absorption chemistry is well known, and the front end sorting and processing, crushing is pretty well known as well. So yeah, so we're looking at an optimal pilot plant capacity of about 10 tonne per annum at approximately 1 kilogram per hour. Some sites we're looking at, you know, here in the southwest of WA, lots of initiatives where you can put these type of plants. You know, we're looking at the Collie Future Fund, Southwest Development Fund, and lots of other potential areas where funding will be available. So effectively what we're trying to do is we're trying to transitioning to an R&D hub with vertically integrated mine gate finished processing. There's great opportunity. There's a fantastic opportunity not only to produce finished rubidium chloride in its final stages and deliver that into the world market, but in addition, we're also exploring the US market, the DoD US market, and perhaps looking at sending rubidium concentrate, which we're currently developed, into a midstream downstream processing to feed the US market. So lots of potential value adds to the rubidium finished rubidium product or near-term concentrate product. So we just work our way through that. I think importantly to understand, we have are very close to working with a world-class engineering company to come on board with us to help us drive this next part of the engineering and front-end design of the pilot plant. And we're very hopeful that we'll be able to announce something in that regard soon with a partner. So where are we? We've got the engineering, what we've done, you've seen what we've done, engineering, scoping, study, bench scale optimisation, phase 2 resource drilling, that's happening now. We've half one is CY26, some studies with CSRO as one of our grant partners, granting of the patent, resource upgrade. I think the resource upgrade will be very early or, very early next year. And the scoping study results will come out. So lots of upside there. The economics look very, very robust. Environmental studies for half 226 grant application for the pilot plant and a pilot plant construction. We're hoping to tighten that timetable up. I think you'll find that once we get the resource out and can announce the commercialities that, this thing will gain its own momentum. We're looking at it and appointing a head to our rubidium processing or the Mount Eden project to head this up, because it's now gone beyond proof of concept. It's a real project with real outcomes, and we're now going to drive that with the inertia that it needs to achieve those objectives. So yeah, so I think what have we got? We've got, if you look at EMC, we've simply got a near-term gold production, low risk in terms of DIMA, near-term cash flow, non-dilutive earnings to non-dilutive financing to fund the other projects going forward in the near term. So exposure to gold, very unique strategic mineral in terms of rubidium. In fact, I think it's fair to say, whilst rubidium is not a strategic mineral on the Australian list of strategic minerals, we've made application to have that, or presented to have that rubidium put on the list, and we're hopeful that might, we've got good representation and good feedback in regard to that. So hopefully we can get rubidium on the Australian strategic mineral list. It's on New Zealand, it's on Japan, it's on USA. I think it's just one of those minerals that has just dropped through the cracks, you know what I mean, as it's not been fully understood. But once that happens, we'll have a very good further access, not very good, we'll have further access to funding, for the respective grant for strategic minerals. So I think that's where we are. So
thank you, Mark. We've got a few questions coming in, so if it's okay, we will start the Q&A through to either of you, Simon or Mark. Mark, that was actually one of the questions, is why is rubidium not classified as a critical mineral outside of Japan and the US? So you've answered that. Who do you apply that to, Mark, when you said you put an application in for that to be reviewed?
Well, Simon, you can answer that because you did the application and this presentation.
So we presented recently to the Critical Mineral Council, advising the Federal Minister in its next review of critical minerals and making recommendations of what may or may not end up on it there. And it's fair to say they're well aware of its properties, its importance, and why, in fact, they listed as a critical metal in both, particularly Japan and the US. And I think anything that New Zealand does before Australia gets Australia very worried. So yeah, they're aware.
I'll try to keep the questions within the project so we don't jump around too much. I'll do my best. You have already answered this. Somebody wrote actually pre-question about EMC's plan to use Dimer. So you have answered that. It's did you want to expand anything further on that, Simon, in terms of using those profits that come from Mount Dimer, which is really exciting, about to go into mining? Did you want to expand on that, or is it pretty evident what's happening?
I think the timeline, as Mark laid out, the funding of the next phase in terms of moving Revere to its potential resource and production could clearly be funded from our short-term opportunities at Mount Dimer, and I think along with grants and funding that we that we have for the Mount Edon next stage of the Mount Edon project, I think it should be clear to the market that we're carefully looking to fund the next stage of our two projects at Painsvine and Meekatharra from cash flow as we move forward.
The inferred JORC resource at Mount Dimer, with the gold prices as they are today, do you have an estimated payback period for the project?
Yeah, look, I think the project is going to be undertaken over 14 months. There's an initial pre-strip from zero down. The main thrust of the main gold sits at below the current pit level at about RL60 from surface. So we do a cutback. We are into some gold in that initial cutback before we get down to RL60. So we start producing after about the current program, about 3 to 4 months of cutback. We then start getting into the real ore, and that's at about 2.4 grams, a little bit high in some instances. The project only goes over 14 months. As I said, it makes about, on the current gold price or $5,000 modelling, about $30 million. There's 200,000 tonne of ore, so they're going to be parcelled and processed at 20,000 tonne parcels starting early in the first quarter next year. So you're looking at about a 10-month sort of processing profile, and maximum cash drawdown on the project is around about $8 million. So we start getting after about month 4, I think it is, and I'll stand correct exactly, month 4 of gold processing, month 3 or 4 of gold processing, we start becoming cash flow positive, yeah. And it ultimately yields about, current 22,000 ounces, it yields about, circa $30 odd million of free flow cash, you know what I mean? So, we think that will adequately finance what we need to do in terms of Mount Edon and also bringing Revere into production, yeah. So, yep. So Revere is also, just for Revere, it's a gravity separation plant, so it's not high cost capital. So we're not looking at building, even if we were to build a 1 million or 1.5 million tonne plant, with an anticipated grade of what we're looking at. We're probably going to be in the order of 20,000 ounces there initially, 20,000 ounces for 25,000 ounces here of production scaled up. Very, very low cost because no strip ratios, gold from surface and gravity separation. So we're very comfortable in terms of the economics of Revere as well. So, yeah.
Thank you. The high-grade intersections that from past drilling, Mark, how do they fit into the overall resource model? And is there any indications that higher grades could be there with the further drilling plan down the track?
Look, I think it's one of the enigmas of Revere is what we call the saddle rifle system, or the Bendigo style mineralisation. So if you can imagine drilling, we've got these repeatable. We've identified at least four repeatable high-grade gold vein systems from surface all the way down to 120 metres. You hit those high grade. When you drill, you either hit the high grade or you don't hit it. And if you miss it, you don't get the reported gold. Okay, so what happens is what we've done subsequent to that is we've done a bulk sampling program with a little gecko gravity separation plant. And what we found is that not only is there the high grade reefs, we've intersected those, but we've also intersected a gold halo. So in other words, we're going to bulk mine it because the entire ore body is mineralized, you know what I mean? So it's better to have a large low grade tonnage, you know what I mean, and mine it that way. And when we mine this, we're going to get a better reconciliation because those higher grade gold, some of those higher grade intersections which we've reported, you know what I mean, will actually be reconciled into the gold grade. And so the bulk sampling program was only done down to 10 meters, you know what I mean? So, and a lot of the high grade gold it is at surface, but most of it starts at a lower level, but it's sub 10 meters, so circa 20 to 30 meters. But we've got enough gold to carry the pre-strip and get down to that high grade. And what we're very confident of is we'll get a higher grade reconciliation in the grade, and the repeatability of those high grade gold occurrences. I think the saddle reef system is a system of anticline folding, and it's evident that at some point in time along strike we're going to find the saddle that's captured captured a lot of gold as part of the actual geological system. So we're not probably there yet, but definitely we know it's there somewhere. We're going to, as I said, we've got enough resource now at Lucky Dog, we honestly believe that, to actually proceed to production, to a production model. Yeah.
How much gold? Somebody has actually asked how much gold did the 36,000 tonne bulk sample produce?
Well, we didn't do 36,000 tonnes, so let's be clear about that. We did about 5,000 tonnes of that. You know what I mean? Because we had a unit. What we did by doing that is we had a greater understanding of the occurrence of gold. So the average grade we got out of that bulk sample across. So every tonne was basically mineralised, and that grade was around about 0.5 or 0.6 of a gram. Some of it was higher, but it was all gravity separated material. So what we were trying to do with that with that program was understand whether gold occurred outside the high grade vein system, and it proved that, which was very important for modelling purposes and to doing further things. Simon, I can't remember what exact amount.
It's fair to say that geological teams, working to finalise, the reporting of that and the resource, in the soon to be released, maiden resource there. So I don't think investors will need to wait much longer to get that sort of accurate information.
Yeah, Simon. In terms of the native title agreement getting signed, is there going to be any challenges there? We know that can be tough. So
we're very close. I think Mark and the team, we've done an excellent job. We have a good relationship with our traditional owners on the ground up there, and it has taken its time, but no, we're very, very, very close to an agreement there, and that will be the final step that's needed for the granting of the mining lease to move this project to its next step.
Thank you. I've got a fair few questions now on Edon. Well, first of all, with the commodity prices across is usually volatile. Is rubidium a commodity that fluctuates majorly?
Well, I think you need to understand it in context. There's an opaqueness to the rubidium market in terms of what is actually being produced, and the only producing rubidium mine in the world is in China. So, clearly what rubidium is, it's a strategic mineral. So the way strategic minerals work for defence, in particularly, it's angled. It has multiple uses, as we indicated in the presentation. But you'll find that the rubidium is strategic, and what happens is the respective governments or the defence departments of the respective buy the rubidium to stockpile it. You understand what I mean? In sheds for use. It's that strategic. You know what I mean? Rubidium. So looking at the market, there is a market there. We're trying to. It's currently worth $4 billion. Everything says that it's growing to $8 billion. There's some catalysts which might make it grow quicker because there's now commentary coming out that rubidium is a direct replacement to cesium. Cesium is not mined. The last major cesium mine in the world was at Bakita in Zimbabwe, and that was shut down because, obviously the social responsibility in mining, you know what I mean, had to be applied. And so cesium supply is limited. Cesium generally comes out of brine, you know what I mean? And as a result, it's very limited. It has cesium's main use, notwithstanding it has specialised use, is within the oil and gas industry. And there's been initiatives now to use rubidium as a direct replacement for cesium in that oil and gas drilling. If it takes a foothold in the oil and gas, that will be a clearly defined market which everyone will understand. However, it is a strategic, and we're looking, if you look at it, we're looking to produce 100 to 150 tonne of finished product, which is very, very small part of the global market. So we don't think there'll be any issue in the market absorbing through compounded growth, organic growth, as well as the strategic mineral stockpiling. So I think if you understand the DoD initiatives in America, in most countries, they simply buy the product. The governments buy the product and stockpile it. It's as simple as that because it is so strategic and it's geopolitical, strategic supply diversification that comes to the fore, So effectively, they underpin the pricing to allow the production to occur.
Yeah. We do have to wind it up because we only have had 45 minutes, but there are a lot of questions. So I'm probably going to suggest that I will put it out to the shareholders via a newsletter with some of these questions and answers so that everybody is clear. But a fantastic overview. Thank you so much for joining us, Mark. Simon, as usual. And
thanks, man.
Yeah, very exciting. And thank you for everybody for joining today.
Okay, thank you. We look forward to responding to those questions. If you'd like to forward those two, please.
Thank you very much.
Thank you.
Thanks, guys.
Right.